If you have $5,000 in the bank right now, there are some things that you want to do with your money, that way you can get the most bang for your buck, and that's what I'm going to be talking about today. Don't you wish that your paycheck would come with instructions on things that you can do with your money, that way you can get the most value out of your money? Ooh, want to blow your money? Go here. Want to grow your money? Go there. And now on top of that, we are in a day and age where saving your money doesn't have the same value as it did 10 years ago or 20 years ago or 50 years ago, which is why it's more important now to be smart with your money than ever before. That's why if you have $5,000 in the bank, in this video, I'm going to be going over 5 things that you need to be doing with your money. But before we get into that, I need you to do me a quick favor and smash the thumbs up button below. The first thing you got to do is understand your savings and make sure you're getting the most value out of your savings. Unlike what you've probably been told your whole life, your savings are not there to make you wealthy, and they will not make you rich. Okay, you cannot save your way to wealth anymore the way you could in previous generations, because the value of our savings are being diluted by inflation. Now, this does not mean that you should not save any money. This means that you need to save your money the right way. What I need you to please understand is that your savings are not there anymore to make you wealthy. Your savings are there to protect you from a financial emergency. At the very bare minimum, you need to have at least $2,000 saved up in a savings account to protect you from an emergency. That way, if your car breaks down, your AC breaks, your window breaks, you have some cash that you can fall back on. That way you don't gotta worry about going into debt. Once you got the $2,000 saved up, then you wanna create a goal for yourself to save somewhere between 3 months and 12 months worth of expenses in your savings accounts. You do not wanna save less than 3 months worth of expenses, and you don't wanna save more than 12 months worth of expenses, and you want to be somewhere in that range depending on how kind of your risk tolerance is. If you have a high risk tolerance, then you don't need 12 months worth of expenses saved. Maybe you can get by only saving 3 months or 6 months worth of expenses. If you're kind of more conservative and you don't like taking on a lot of risk, then you might want to save a year's worth of expenses. So if you take a look at your monthly expenses, your rent, your groceries, your utilities, your car payment, and everything else, and this costs you $4,000 a month, at the very bare minimum, you want to have $12,000 saved up in a savings account. That's 3 months worth of expenses. And at the high end, you want to have 12 months worth of expenses, which is $48,000 in your savings account. So this is money you want to put in your savings account that you do not touch unless you run into a financial emergency. By the way, Gucci having a sale is not an emergency. Besides these savings that you're putting aside for an emergency, the only other reasons why you should be saving your money is to save money for a big purchase, like a down payment on a house or a car, or saving your money for an investment. Let's say you want to invest in a rental property, or you want to invest your money into the stock market, but you don't know where yet, or you want to invest it somewhere else, but you're just trying to accumulate some cash, or you don't know where to put this money yet, then it's okay to save your money. If you're saving your money for an emergency between the 3 to 12 month range, or you're saving your money for a big purchase, or you're saving your money for an investment, that's okay. But beyond those 3 things, you should not be saving any additional money. Your savings, like I said before, are not there to make you wealthy. Your savings are being diluted by inflation, so if you want to become wealthy, you want to make sure you're saving your money the right way. By the way, I should also mention that you may want to consider moving some of your savings to an online account, because some online banks are going to pay you way more interest on your savings than a traditional bank will, because online banks don't have the same overhead and the same fees as traditional banks, and so they have more money that they can pay you with more interest. I'm not going to talk too much about that in this video, but if you want to learn more about how online banks work and how you can earn more interest with an online bank, I'll put a link to an article that our team wrote talking about online banks and how you can use them in the description below. The second thing you want to consider doing now that you have some cash in the bank is you want to start using some of your cash to pay down your debt. I always think it's so strange when somebody has a lot of cash in the bank, but they also have credit card debt that they're paying interest on every single month. So let's take a look at this. If you have your money in the bank, your savings account is going to pay you somewhere in the range of 0.01% a year in interest to somewhere like 0.5% a year in interest if you are lucky, and this is probably with an online bank. So your savings are paying you next to nothing. But if you have debt, and this can be any kind of debt, from credit card debt to car loans to your mortgage to your student loans, your debt is going to cost you at least 3% a year, unless you got a very good rate on your mortgage, but somewhere between 3% a year, so let's say 25% a year. So if you have debt, you're paying out 3 to 25% a year in interest on money that you're borrowing, but at the same time, when you keep your money in the bank, it's paying you less than 1% a year. So now, if you have some savings in the bank that can protect you from an emergency, it makes sense for you to take some of these savings and use it to pay down this debt. That way you don't have to pay this 3 to 25% a year in interest on your debt. The nice thing about paying your debt off early is you get a guaranteed return on your money. So when you go out and you invest your money, there's always a risk that you will lose money because investing has risks. You're not guaranteed to make money, but when you pay down your debt, you are getting a guaranteed return on your money. And it's funny because on YouTube and on Instagram, sometimes we talk about what would happen if you could grow your money by 8% a year or by 10% a year. And I always get comments from people saying things like, wow, that's not possible. Where in the world could I get an 8% return a year? But at the same time, your credit card company is making 18, 20, 25% a year every single year in interest when you carry credit card debt. Now, if you have this credit card debt and you have extra cash in the bank, you want to take this cash that's earning you nothing and use it to pay down this high interest debt, because this high interest debt is making your credit card company extremely wealthy. This is the reason why so many credit card companies are rolling around in cash, because people are buying things they don't need that they cannot afford with money that's not theirs at 20 to 25% a year in interest, and then they're keeping their extra cash in the bank that's paying them nothing. So once you have some savings, I want you to take your extra cash and I want you to use it to pay down your high interest debt like your credit card debt, because this debt is skinning you alive. Now, if you have low interest debt, something like a mortgage or student loans, it's not as urgent for you to take all of your extra savings and pay down your debt as fast as possible, because now it might be more beneficial for you to invest your money if you can handle the higher risk, because maybe you can get a better return there. But again, if you don't like taking on risk and you have extra cash in the bank, then use it to pay down your debt, because now you're getting a guaranteed return on your money. Here, you're getting next to nothing, but here, you're getting a guaranteed return on your money, even if it's just 3% a year. Because if you pay down your mortgage 1 year early and you're paying 3% a year on your mortgage, well, that's a 3% return on your money, because now you don't have to pay that 3% interest to your bank. Now, on the flip side of this, to avoid this issue happening ever again, I want you, now that you have cash in the bank, to stop financing things completely. Financing things that you don't need, that don't pay you with money that's not yours, is the #1 reason why the majority of people are broke. And well, that's why we're the minority mindset, because I don't want you to think like the majority of people. If it doesn't put money in your pocket, stop financing it. The only exception to this is your house. But now, if you have the savings in your bank account, you can use some of this money to pay down your debt. That way you can keep your future money in your pocket. The third thing that you want to do if you have $5,000 in the bank is now start thinking about investing your money. Investing is how wealthy people get rich, and it's how wealthy people stay rich, because now you're using your money as a tool to go out and attract you more money. One of the things that I wish schools would start teaching us when we were in middle school is that there's more than one way to earn money. Because throughout my entire school career until I got to college, I thought that the only way that you could really earn real money was by getting a good degree and then going to work every single day. But the reality is that's not a very sustainable way for you to make money for the rest of your life, and that's not how rich people make money. The way rich people make money is they make money, whether it's from their job or their business, and then they take the money that they made and then they put this money to work. That way their money is making them money. So now what you have done is, yes, you're going to work every single day to get paid, and now when this money hits your bank account, your money is not just going to sit there. You want to put your money to work. That way your money can earn you more money. So now you have just cloned yourself. Now it's not just you making money, now it's you making money, and it's your money making you money. What every wealthy person strives to do is they want to replace their active income, the income that they get from their job or their business, with their passive income, which is the money that their money makes them. Because as soon as you can do that, as soon as your money is making you enough money for you to survive, well, now you're financially free, because you don't have to go to work to get a paycheck. Imagine this. Imagine a world where now you don't have to get paid from your job because you have enough money coming from your investments. Now all of a sudden your job doesn't look like such a chore or such a burden, because now you can do what you want and you can do what you love, because the money from your investments are paying you enough for you to survive. But the only way you can do that is if you put your money to work. Now, while this all sounds good in theory and all makes sense, it's not always so easy and practical, because now when it comes time for you to do it, you got to actually invest your money, and that's not always easier for people to do, because you also might lose your money, and people don't want to take that risk of losing their money. So what do? They just save your money. Now when you save your money, your savings are being eaten away by inflation, because the price of everything else keeps going up while your savings are not doing anything. They are barely growing. They're essentially dead, while the price of everything else around you, your rent, your groceries, your healthcare costs, your vacations, the price of all these things keep going up, but your savings are not doing anything. Now, when it comes time for you to actually invest your money, I want you to understand the difference between trading and investing, because they're two very different things. Trading is when you throw your money in the stock market or in the cryptocurrency market hoping that you can make a quick buck. You're hoping that you can see your money grow by 20, 40, 100% in 2 months or in 6 months. So you're hoping to make a quick buck. That's trading, and there's a lot of speculation, and it's almost like gambling. I mean, sure, there's some strategy here, but at the end of the day, you're just hoping that you can make a quick buck by turning something around or finding the next hot stock or the next hot cryptocurrency before it pops. Investing is not like that. Investing is when you take your money and you put it into something that has value, that you believe in, and that you want to own for the long term. And when I say long term, I mean at the very bare minimum of 1 year. But most of the time when we talk about long-term investing, I'm talking about 10 years plus. So when we talk about investing your money, I want you to take your money and put it into these investments, whether it's stocks, whether it's real estate, whether it's cryptocurrency, if that's what you believe in for the future. I want you to take some money, put it into these things, and let it compound and grow. And when I say compound and grow, what I mean is now every time you get paid, every month, every paycheck, whatever, I want you to put more money towards your investments. And anytime your investments make money, I want you to take that money and put it back into your investments until your investments have hit a point where now you can use your investments to actually live off of. We are living in a day and age where it is more accessible for people than ever before to start investing their money. I mean, before, if you wanted to invest your money, and I'm talking a few decades ago, you would have to call up a stockbroker. You couldn't do this with $100, or it was extremely difficult with $100. You'd have to call up a stockbroker. You'd have to pay a lot of money in commissions. It was just a long, tedious, and expensive process. Now, if you want to invest your money, whether we're talking about stocks or real estate or crypto, all you got to do is you can open up a brokerage online. And even with real estate, there are new crowdfunding platforms on the internet which let you invest in real estate without having to go out and buy a full property. So now you can invest in real estate with way less than $100,000. I mean, you can invest in real estate online or get exposure to real estate investments with like $1,000. So now it is much more accessible for regular people to start investing their money, which is a good thing. But this only happens if you're financially educated and you know what's going on. That way you can make smart investment decisions. So if you have a few $1,000s in the bank right now, what I need you to start doing is I need you to start learning. I need you to start learning about the stock market. What is it? How does the stock market work? How do you find a good company? I need you to start learning about the real estate market. What is real estate investing? How does it work? That way you can kind of get a feel of how these different investment asset classes work so you can understand what you want. Because if you want to start investing in real estate and you want to own physical real estate, you're going to need more than $5,000. If you want to invest your money in the stock market, you can do that with $5,000, but you got to understand what your goals are and make sure that this asset class aligns with your goals and understand what you need to do to research and how you can get started. This is what financial education is all about. Taking that first step and making your first investment is always the hardest because you're always scared you're going to lose. And so what I want you to do is kind of just think of this money that you invest as lost money. As soon as you invest it, just pretend like this money is gone, it's disappeared, it got burned, it went into thin air, whatever. Because now, if your investment goes up, well, now you just found brand new money. But if you lose money, well, no harm, no foul, because you already thought this money was gone, but at least you learned a lesson. Because you're gonna lose money along the way. I mean, every investor loses money at one point or another. That's just how you learn. That's the tuition of being an investor. If you do want to learn more about how you can start investing your money, we have tons of videos on our channel where we talk about that. You can check out our website, theminority-mindset.com. The fourth thing that you want to do when you have $5,000 in the bank or more is you want to make sure you start protecting your assets the right way. Estate planning and insurance are two things that everybody needs, that nobody likes paying for, that nobody likes planning for, and that nobody likes talking about. Estate planning is what happens after you pass. What's going to happen with your money? Now, if you only have $5,000 to your name, then this isn't too big of a deal. But now, as you start to build your wealth, chances are that is going to grow, and people are going to want to know what's going to happen to your assets after you die. And if you don't have a plan for your money, the government's going to decide, and nobody wants that. So as you start building your wealth, you also want to think how you're going to protect your assets and pass your assets after you go. One of the easiest ways to do that is by speaking to an estate planning attorney or by using a website online to create a will or a trust, because these are things that can help tell the world how you want your assets to pass after you go. The second thing you want to do is you want to make sure that you have the right insurance in place, because insurance is a small price you pay today to protect you against a big headache in the future. This would be things like car insurance and health insurance and home insurance and life insurance, and if you have investment properties, rental property insurance too. As you start to become more and more wealthy, you're gonna really start to see the value behind these insurances, because the last thing you want is a tragedy to happen and now all of a sudden your bank account and your assets have been depleted because you had to pay for something that you could have protected through insurance. And even beyond that, an insurance that is often overlooked is life insurance, because the whole idea behind life insurance is now you are protecting against the worst case scenario. Because if you are a breadwinner for your family, if you earn an income and your family relies on your income to survive, and if something were to tragically happen, if you were to die and now your family all of a sudden lost this income stream, how would they survive? And you have to ask yourself this. Now, what you obviously want is, for one, nothing bad to happen. Number two, if something bad were to happen, you want to have investments to protect your family. Because now, if you have a whole bunch of assets, you have these things that can pay your family. That way, even if your income were to go away, your family would be okay financially because they have these assets to fall back on. But the third thing, if you don't have those assets yet, is you want to have life insurance, because what life insurance is essentially protection against the worst case scenario type of situation. Because now, if you were to tragically pass and you had life insurance, your life insurance company would come in and they would give your family a big check. That way now, even though they lost their income, they would at least be okay financially, because this insurance company would give your family a big check. Typically, when we talk about how much life insurance you need, you want to have a minimum of 10 times what your salary is. So if you make $50,000 a year, you would probably want to get a $500,000 policy. And so now, if you were to tragically die, your insurance company would give your family a $500,000 check. Now, I know this isn't a very fun topic that anyone really likes talking about, but the good news is life insurance doesn't have to cost that much money. Like, if you are a healthy 30-year-old male, you can probably get $1 million life insurance policy for less than $30 a month. Now, if you are interested in learning more about life insurance and you want to see how much life insurance would cost you, you can check out our sponsor, Policygenius, because the way Policygenius works is you can go onto their website and enter in a few pieces of information, which just takes a few minutes, and the Policygenius will present you with actual life insurance quotes from different companies. That way you can compare. The reason why I like Policygenius is because they want you to get the best price possible, and they stand by what they do. Because if you can go out and find a cheaper life insurance quote anywhere else, they will pay you $100 for wasting your time. So if you want to learn more about what life insurance is, or if it's good for you, and you want to get a free life insurance quote so you can see what it would cost you, I got the link to how you can do that with our sponsor, Policygenius, in the description below. And the fifth thing that you really want to think about doing if you have $5,000 in the bank is you want to start investing in your education. The thing that many of us kind of have a misconception on is school and education, because a lot of us believe that school is the end of our education. But the reality is, if you want to become wealthy, school is just the basic building blocks. It's just the first step to your education. If you have cash in the bank and you want to learn how you can start accelerating how much money you're making, how you can invest your money or whatever, now it's time for you to start investing in your education. Start taking classes on how you can earn more money. Maybe you want to invest in real estate, take a class on that. Maybe you want to invest in the stock market, take a class on that. There are a ton of classes on the internet now that can teach you anything you want from people that are actually doing what they teach. Now, this is where you have to be a little bit careful, especially if you're on the internet, because sometimes it can be hard to tell a scam from a real class. But the thing that I want you to pay attention to is, what are you learning? If this class is going to teach you how you can make 6 figures in 60 days, chances are it's going to teach you a whole bunch of crap, because you're not really learning anything substantial. You're just learning how to make a lot of money quickly, and chances are there's not going to be that much substance in there. But if you want to learn how to invest in real estate, well, that's a pretty good topic. And if you can find a teacher who actually invests in real estate, well, that might be a good class. Now, I invest in real estate, and I don't have a class on real estate investing, but I've been thinking about creating a class on real estate investing. So if that's something you'd like to see, let me know in the comments below. I have spent a lot of money on online classes, like in the range of tens of thousands of dollars, because as I was building Minority Mindset, I took classes on a whole bunch of things. I took classes on how to make YouTube videos. I took classes on how to run Facebook ads. I took classes on how to build a good Instagram page. I took classes on how to build a blog. I took classes on how to build an internet business. I mean, I took a ton of different classes that taught me all different things, and they kind of help accelerate your growth, because now you can learn from somebody who's already been doing it. The thing that I want you to remember with these type of classes is that they don't work unless you do. So if you're not willing to put in the work, if you're not willing to start a side hustle, or if you're not willing to invest your money, you're not willing to do these things, then your class isn't really going to do much for you, because a class is just education, and your education is worthless unless you do something with it. So if you are going to just invest your money into a class and you know you're not going to do anything with it because you're lazy or because you don't like taking action, then don't waste your money on that, okay? Invest your money into something else. Put your money into an index fund, into an ETF, or anything else where you can get a return. But if you're willing to put in the work and you know that about yourself, you know you're a hustler, you know you're willing to put in the work, then yeah, go out out and invest in your education and start doing more things with that education. That way you can start attracting more money or grow your money. We're going to jump back into the show in just a minute, but first, here's an advertisement from our sponsor, me, with Briefs Media. If you're looking for an easy way to stay up to date on what's happening in the top finance and business news, we make it super easy for you to do that at Briefs Media because we created a free newsletter called Market Briefs. Market Briefs is a super simple and easy way for you to stay up to date on the top finance and business news. You can read Market Briefs in less than 5 minutes every morning. It's a fun and witty and easy to read newsletter, and I promise, if you join Market Briefs, you are going to love it. Now you might say, Jaspreet, how can you promise that I'm going to love Market Briefs? Well, if you don't love Market Briefs, you can unsubscribe at any time because it's completely free. So if you have not joined Market Briefs yet and you want to stay up to date on what's happening in the top finance and business news, I got the link to how you can join Market Briefs down in the description below, or you can go to briefs.co/market. That's briefs.co/market. And with that, let's go back to the show. If you wanted to save an extra $1,000 over the next 30 days, there are 5 things that you can do right now to help you do that. Now, before you get into that, you have to first calculate what does it mean to save $1,000 in 30 days. That means in 30 days, you'd have to save or put aside about $34 a day if you want to save $1,000 over the next 30 days. Now, there are 5 things or 5.5 things that you can do right now to help you get there. Number 1 is to renegotiate some of your bills so you're not overpaying on some of the bills that you have because, well, a lot of Americans are overpaying on the bills. Number 2 is stop spending all of your money. Number 3 is sell some of your stuff. Number 4 is hustle to earn some more money. Number 5 is, well, you can shop a little bit smarter, and 5.5 is earn some extra interest on the savings that you're putting aside. So let me start by talking about number 1. How can you renegotiate some of your bills? That way you're not overpaying on the bills that you have. I read a statistic recently that said something around 8 out of 10 Americans are overpaying on at least one of their bills. And I was just one of those people. I have Xfinity at home, and when I originally got Xfinity, they said that it would be cheaper for me to buy cable, internet, and phone as opposed to just cable and internet. Now, I don't use a landline anymore, but because that bundle was cheaper, I got cable, internet, and phone. Well, after our contract expired, they changed my plan, and now I'm paying monthly, didn't really think much about the price, and I had this idea to call up Comcast or Xfinity now and see what's going on with my bill, and that was when I found out that it was actually cheaper now for me to stop paying for my phone and just have cable and internet. So I was paying for cable, internet, and phone even though I didn't have a landline, just because when I originally got that bill, it was the cheaper option. But then after my contract finished, I just got rolled over into something else, and now I'm paying for cable, internet, and phone even though I didn't need phone, and it was cheaper for me to get rid of phone, so I stopped paying for phone, and now I save like $35 a month just because I called and asked. And what a lot of these utility and subscription-based companies like your internet, your phone, your cable, a lot of these subscription-based companies will do is they will just keep slowly raising your monthly rates because they know that most people are not going to do anything except keep paying the higher price. But what you can do with a lot of your bills is you can just ask them to lower your price. And this doesn't mean you have to sacrifice anything. This is a quick and easy way for you to save a little bit of money every single month by just spending 15 minutes going through your bills. So what I want you to do is take a look at your cable bill, your internet bill, your phone bill, your cell phone bill, and any other utility that you might have, and then shop around. See what the competitors are charging. Then I want you to call their customer service office and ask about your bill and see if there's anything that they can do to reduce the price of your bill. But the key here, I'm going to give you the real secret to succeeding here, is I want you to be nice, because these customer service reps are being yelled at and cussed at all day and night long. And so if you're nice to them, they will be nice to your wallet. Many times these customer service reps will be willing to reduce your bill because these companies would rather give you a little bit of a discount than have you go to one of their competitors. So if you see that the competitors are charging less or they have some sort of introductory offer, you can use that as leverage to get a lower bill. But just be nice when you're talking to the customer service rep, because if you're mean to them, they're not going to want to deal with you. But if you're nice to them, they'll be nice to your wallet. The second thing that I want you to do is stop spending so much money. The easiest way to have more money right now is by not letting your money leave your bank account, not letting your money leave your wallet. And the way that you can do that is by stopping spending your money. Now, there's a couple things that you can do to help you with this. One of the simplest things that you can do is follow the 24-hour rule. If you go to the mall, you find a sweater that you like, and now you want to buy it, and you see that it's $70. Well, before you go out and buy the sweater, Just give yourself 24 hours to think about it. Do you really need the sweater? If the next day you wake up and you say, you know what, I don't really need the sweater, I don't really want it, well, now you just avoided that impulse purchase. If you say, oh, I really do need that sweater, it would look great at this party and there's something I really want, now you can give yourself permission to potentially go and buy it. Although if you don't have the money to buy it, stop spending that money, but you're giving yourself a little bit of a cushion, and it's an easy way to stop impulse purchases because you're not telling yourself not to spend money, you're just giving yourself a little bit of a pause. 24 hours to think about it. The next thing you do is really just think about different ways that you're spending your money. And one of the things I like to do here is just write down where your money is going. This is going to take a little while, but spend an hour doing this because this will immediately change the way that you spend your money, and you won't need any guidance to tell you how to do it. Go and take your previous month's incomes and your credit card statements and your debit card statements and your bank statements and lay them out. Then I want you to write down, whether it's a Google sheet, Excel sheet, or a piece of paper, I want you to write down how much money you made. Then I want you to subtract all of your expenses. Write them out line by line. I know it takes a little while to do this, but you have to see where your money is going. Then what you're going to see is how much money you made and how much you spent and where all of your money went. Now at the bottom, you'll see how much money you saved and invested and gave to charity and everything else. But if you spent all your money, now you can see where your money is going. And as soon as you see how much money you spent at Gucci or Lululemon or at the restaurants eating out, now all of a sudden you can see where all of your money is going. And now if you want to have more money this month, all you got to do is stop spending money where your money went last month. So now take a look at where your money went and stop spending so much money. There are a lot of ways for you to stop spending money. Before you go out to eat at a restaurant, eat dinner at home. That we're not so hungry there. Maybe just drink water there. Maybe only eat an appetizer there, that we don't have to eat an appetizer, get a drink and get a meal and get a dessert. Eat before you go, that we can save some money. Don't go out and watch movies in the theater. Watch them at home because you're already paying for Netflix. Find ways to stop spending money. That way now you can keep some more of that money right now because, well, if you really want to save that money quickly, you can't keep letting that money leave. The third thing that you can do if you want to get some money quickly is sell some of your stuff. Take a look around you. Every single person has things that are collecting dust around them. And if you want to get some more money quickly, find ways to sell it and turn it into cash. And that can also include your car. For many Americans, your car is a major money pit, especially if you're financing a car. Not only now do you have to pay for your car payment, your car is losing value, then you have to pay for the gas, maybe the premium gas. And we know the premium gas is not cheap. Then you got to pay for the expensive insurance because you got a nice car. And if you have a nice car, you also got to pay for the expensive maintenance, the expensive oil changes. And now when you have an expensive car, everything that ever happens to your car costs 5 times more than if you would have had a cheaper car. So now, if you're paying all this money on your car, get rid of the car. Get something cheaper, something that you can afford with cash. Instead of paying $700 a month on a $50,000 car, how about you take the $8,000 that you put down and use the $8,000 to go out and buy a car with cash? Now, not only is your insurance going to be less, not only is your gas going to be less because you don't need the premium gas anymore, not only is the maintenance going to be cheaper, not only is the oil changes going to be cheaper, but now you don't have to worry about the $700 monthly payment, and you can take the $700 and put it back in your pocket every single month. And now you can take the $700 and work to invest that money that will actually make you wealthy, because when you give that $700 to your car company every single month, well, not only is that not making you any richer, it's making them richer, but you're paying that $700 a month to finance a car that's losing value each and every day. And this is why that basic level of financial education is so important, because it is so normal to have a car payment. Everybody has a car payment, and when you pay off a car, what do? Well, you go and buy a new car. But the reality is, if you want to build wealth, it's actually kind of a simple process. You got to stop letting all your money leave, and you got to use that money to buy investments. But you can't buy any investments when all of your money is going out to make somebody else rich, when all of your money is going to your car company, when all of your money is going to Gucci, when all of your money is going to the mall. Well, you never have any money to make yourself rich. And this is what financial education is all about. So now we talked about how you can renegotiate your bills so that we can keep some money without changing anything in your lifestyle. Then we talked about how you can spend less money so you can change your lifestyle to have some more money. And then we talked about how you can sell some of your stuff, which could put a lot of money in your pocket depending on what you're selling. But this is going to require you to make financial sacrifices. The fourth thing that you can do is now work to hustle and earn some more money. And when I say hustle, I mean get to work. Because the reality is there's a limit to how many pennies you can squeeze out of your income, but there's no limit to how much you can earn. And I don't want you to get into this mindset of constantly just squeezing pennies, of constantly just being a penny pincher, because at the end of the day, a penny saved is just a penny. So the goal shouldn't be to just live smaller, live smaller, live smaller, because number one, What's the point of working so hard to only live small? And number two, well, there's a limit to how small you can live, but there's no limit to how much money you can earn. And this is where now I want you to think a little bit bigger and start trying to come up with ways of how you can earn more money. Now today, in today's economy, there is a truly infinite number of ways that you can earn more money. You can go and cut your neighbor's lawns. You can go and paint somebody's house. You can start a YouTube channel on the internet. You can start a blog on the internet. You can start an Instagram page on the internet. I mean, there's a lot of things that you can do. You can go ahead and create your own product. And this is where you have to be able to align your own interests with your own knowledge. Every single person has their own knowledge and their own passion. Some people are going to be able to make a lot of money by helping other businesses manage their accounting. Some people are really good and they like doing graphic design or video editing. Some people really like writing and they can make a lot of money doing that. Some people are really good at managing people. Some people are really good at organizing stuff. There's opportunities with all of these. You just have to go out and find them. Now, this doesn't necessarily mean you have to go out and create your own major business and hire a bunch of people, but just get started. At the very least, you could even consider being a freelancer. There are websites on the internet like Fiverr.com and Upwork.com. I am not endorsing any of these sites. They're not paying me to say this, but there's a bunch of freelancing sites on the internet where you can go and just offer some of your services and potentially get paid to help other businesses make more money. Like if you're really good at organizing stuff, you can help CEOs organize their inboxes, their email inboxes, because guess what? The time for a CEO is very valuable. And if you could save them 30 minutes a day by managing their email inbox, that could be worth a lot of money. If you're really good at graphic design or visual design or UX or UI or video editing, you can go out and find business owners, you can find CEOs, you can find Instagrammers, you can find YouTubers and try to offer your services to them. Now, the next thing you're going to say is, but Jaspreet, I tried it. It's so hard finding my first client. It's so hard finding businesses or people that are willing to pay. And you are absolutely right. Guess what? Making the first $100 is harder than making the first $10,000 because the first $100 requires you to figure everything out. Figure out how to offer a service, figure out what the service is, figure out how to find a client, figuring out how to sell. Making that first $100 is the most difficult because you have absolutely no idea how to start. Once you figure out how to make $100, now all you got to do is keep doing what you just did to scale it up to $10,000. But you have to start with something. And that means you have to go out and hustle until you can get that first $100. That means you have to do more outreach. You have to keep contacting people. You have to keep learning. You have to keep trying things in order to get that first $100. And if what you're doing is not working and you've tried it again and again and again and again and again and again and again, not just a couple of times, but you tried it a lot of times, well, then maybe you go out and learn, watch YouTube videos, read blog posts on how to find your first client. And if you stay persistent, eventually you will find somebody who's willing to pay you some money. And once you find somebody who's willing to pay you money, now what you want to do is not milk them for their cash, but use them to get a testimonial, use them to get a referral, use them to get more money. Because now you are in the business of getting more clients, getting more customers, because you got that first person willing to get you money. But if you want to get more money, you have to go out and be willing to put that work. The thing that holds so many people back from earning more money is not the lack of tools. It's not the lack of resources. It's not the lack of money. It's the lack of hustle, and it's the lack of mindset, and it's the lack of willing to try things. That's really what it is. And if you have that willing to try, if you have the willing to hustle, if you have the willing to learn, you're going to do whatever it takes. Whether it's reading books, watching YouTube videos, listening to podcasts, and trying things, and you're going to be willing to fail. And you just got to keep coming back, getting up, trying, and then you're going to be able to find somebody who's willing to give you money. And once you can get the first $100, now it's just a matter of repeating that 10 times to get your first 1,000. Then you repeat that 10 more times, and now you got 10,000. Then you repeat that 10 more times, well, now you're at $100,000. And now you just keep scaling, but it starts with that first $100, which is the most difficult thing to do. The fifth thing that you can do to save that $1,000 quickly is shop a little bit smarter. Now, some of this is going to be a little bit illogical because some of it will require you to pay more money today. For example, I was having an allergy reaction to somebody's dog the other day, and I needed a Claritin. And I don't know why I got allergic to cats and dogs, but apparently now I'm allergic to some cats and dogs. So I go into the store to get a Claritin. And they have a few different options out there, one with 20 pills, one with 50 pills, one with 100 pills. And I know that I will occasionally use Claritin, so I will eventually go through those 100 pills. And now on the display, it has the unit price per Claritin. Now, if I know I'm going to use all of the pills in this little case, in this little bottle, it makes sense for me to pay the lowest price per unit, because if I just buy the 20 bottle today, I might have to buy another 20 bottle in a few weeks and another one in a few weeks. Versus if I just buy the 100 pack today, Well, now if I can use all of it, I'm paying less per unit. So now take a look at the unit price of things that you buy, because a lot of stores now are required to put that unit price of an item on the display. That way now, if you're going to use something, pay the lower unit price. Even that means you have to pay a little bit more money now, it's going to save you more money in the long term. And in addition to that, just shop a little bit smarter. Stop paying for ATM fees. That $4 fee every time you go to pull cash out of the ATM will start to add up. Stop paying overdraft fees. Banks love it when you spend all of your money, because now you got to pay $35 in a bank account where you don't have any money to begin with. Not only do you have to fund the bank account again, but now you got to pay the overdraft fee. Stop paying these fees. Stop paying the late fees. I cannot stand late fees. And if you do get a late fee for one time, if you do get an overdraft fee the first time, go out, talk to the banker, talk to the company, tell them, hey, I'm so sorry I got this late fee. This has never happened before. It's not going to happen again. Can you please give me a waiver this first time? Can you please waive this late fee or this overdraft fee? And most of the time, they're going to say yes. And they will waive the $35 or $50 late fee because you haven't done that before. So just ask. It's an easy way for you to keep some extra money in your pocket without making any sacrifices in your life. And this brings me to point 5.5. And the reason why I call it 5.5 is because, well, it's really not going to accelerate your way to $1,000 that quickly. But if you have some extra cash sitting aside, I want you to consider moving some of your money to a high interest savings account. Because if your money is sitting in a savings account and is paying you 0.05% in interest, well, what you could do is just look for a high interest savings account, which, the interest rates change month to month. But at the time of recording this video, you have high interest savings accounts that are paying 4%, sometimes even close to 5% in interest on an FDIC insured bank. And now you're earning more interest on your savings by doing nothing except moving your money to a high interest savings account. So if you have cash sitting aside, at the very least, just go out and look for some high interest savings accounts. Just make sure they're a legitimate bank, make sure they're FDIC insured. But now if it's FDIC insured, it's a legitimate bank, well now at least you can earn some interest on your cash while it's sitting there. We're going to jump back into the show in just a minute, but before we do, here are a few words from our sponsor, M1. If you've been watching my videos, you've probably heard of me talk about passively investing your money in the stock market, where you have a CPA, a consistent, passive, and automatic system where money is automatically invested into the stock market for you. Well, a super easy to use platform that can help you passively invest your money into the stock market is M1. And as a little disclaimer, at the time of me recording this video, M1 is a tool that I use to passively invest my money into my portfolio of ETFs. The way it works is you get to create your pie or your portfolio of ETFs or stocks that you want to invest in, and then you can create a cadence of how often you want to invest into this portfolio of ETFs or stocks. For me, I invest every Wednesday. You can invest every 2 weeks, every month, but once you pick the cadence, you set it and forget it, and M1 is completely free for you to use. Now, of course, investing has risks. Are you guaranteed to make money when you invest? No, of course not. In fact, you will probably lose money at some point, which is why you want to always do your own due diligence and never blindly trust a random guy on YouTube. But you can mitigate some of your risk by investing your money into good assets for the long term, which is why I invest my money into my portfolio of ETFs, whether the market's up and down, because I'm investing for the long term. Now, of course, you want to do your own research, get a financial advisor if you need one, but M1 is a great tool that can allow you to passively invest your money yourself. Minority Mindset is a paid partner with M1, meaning if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and create a free account with M1, I got the link to how you can do that down in the description below, or you can go to theminoritymindset.com/M1. That's theminoritymindset.com/the letter M and the number 1. And with that, let's go back to the show. Everybody says that they want to become wealthy, but when it comes time to actually making sacrifices and having to go through short-term pains to achieve that long-term wealth, that's when the majority of people start to kind of run away, and they start to make spending decisions based on their emotions and their feelings instead of what's actually good for their long-term wealth. There's a difference between wanting to become wealthy and actually wanting to become wealthy. Everybody says they want to be wealthy. I mean, who doesn't? Who doesn't want to have an extra $1 million? But if you want to actually be wealthy, then you gotta actually want to become wealthy and do the 5 things that I'm going to be talking about in this video that we can actually become wealthy. You can really see the difference between somebody who wants to become wealthy and somebody who actually becomes wealthy by your actions. Like if you get a raise and you make an extra $1,000 a month, now what do? Well, if you just want to become wealthy and you're making this extra money, you're gonna say, ooh, well, let me celebrate a little bit right now and let me start investing later because I gotta enjoy my life right now. So you got this extra $1,000 a month and you have this plan where you wanna start investing and you wanna start building your wealth, but you kinda wanna enjoy this money right now because you only live once, right? And you're only young once. So what do? You buy yourself a nice car, you go on a nice vacation with your family, and you go to Chipotle and celebrate with some extra guac. But if you actually want to become wealthy, then what are you gonna do? You're gonna take all of this $1,000 that you're making extra and you're gonna put it towards your investments right now. That way you can achieve this wealth sooner because you understand that this is a short-term pain that you're going through. That way you can achieve that long-term financial freedom. The thing that everybody gets confused here is they assume that if you wanna become wealthy, you have to have a $100,000 a year job or $250,000 a year job or $1 million a year job. But it doesn't really work like that. There's a lot more to becoming wealthy than just having a big salary. I mean, it can help, but if you don't know how to use your money, or if you don't have the right mindset, or if you don't know how to pay yourself, or if you don't have the right patience, then it doesn't really mean anything. It's all about what's in here before you make the money. If you actually want to become wealthy, there are 5 things you need to do. Now, what you got to understand is that these 5 things are not easy. So if you're not willing to go through short-term pain, then it's not going to work for you. And if you are going to get caught up in your feelings and get triggered anytime something is hard or something goes wrong, then it's not going to work. But if you're willing to go through the short-term pain and if you're willing to put in the sacrifice and you follow these 5 things, then you will be able to become wealthy. The first thing you got to do is have the right mindset about money. I bet you thought I was gonna say smash that thumbs up button below, didn't you? Having the right mindset is fitting because, we are the minority mindset, which is all about having the mindset of thinking different than the majority of people. But when it comes to having the right mindset about money and building wealth, the first thing you gotta get right is understand the difference between becoming wealthy and being rich. Now, I know some of this is just syntax, but when people talk about being rich, a lot of times what they talk about is your appearance, the way you look. Having the nice cars, having the nice watches, having the nice home, that's looking rich. Being wealthy is more about being free, having the time to do whatever you want because you have the financial freedom. You can look rich and be broke. I mean, you can have a nice car, nice clothes, a nice home, go on nice vacations, but still be living paycheck to paycheck and have really no free time for yourself because you have to work your butt off in order to make the payments on all the things you have. Being wealthy is being able to live your life financially free without having to worry about the payments because you understand how to use your money, you understand how to invest your money, you understand how to grow your money, so you're able to live your life the way you want and have the time to do the things you want because you have that wealth. My goal is for you not just to have all the nice things. I mean, I want you to have the nice things that you want, but I want you to be able to afford the nice things without having to worry about the payments. That's why I want you to understand how to become wealthy. That way you can make those sacrifices today. That way you can buy all the nice things you want without worrying about the price. If you do want to learn more about the difference between being rich and being wealthy, I already made a video talking about that. So if you want to watch that, I will link it for you in the description below. The second thing when it comes to your mindset is if you want to become wealthy, you got to stop hating the idea of becoming wealthy. I mean, we are living in this culture nowadays where it is just commonplace to hate people because they are wealthy. Why? Because they're wealthy. But if you really want to become wealthy yourself, instead of hating the person that has become wealthy, you need to be one of the people that is learning how they became wealthy. That way you can apply those strategies and techniques to your life. Hate it or love it, the reality is we live in a society where the producers are the ones who are rewarded and the consumers are the ones that pay the price. So if you really want to become wealthy, you got to understand this shift and you got to start being a producer. That way you're the one that's making money when everybody else is spending money. So if you really want to become wealthy, you got to understand that. And you gotta stop hating people for becoming wealthy and understand the game and win at the game. Now, if you don't like the system, then what you should do is become wealthy and then use your wealth to give back and help other people. That's a good thing. And now you can inspire other people to do that. Okay, but if you really want to become wealthy, you got to have the right mindset because if you hate the idea of becoming wealthy, you are never going to become wealthy. The reality of the game is the more money you have, the more you can do. If you're broke, you can sacrifice your time and you can help people. But if you have $1 million, now you can help out a whole lot of people. You can feed a lot of hungry people and you can shelter a lot of people who need shelter. If you're broke, you can't do that. Yes, you can sacrifice your time and you can serve people and you can help people and you should. We should all have the mindset of wanting to give back and taking care of our community. That's very important. That's important to me too. But the more you have, the more you can do. So if you want to be able to help more people, you got to understand how wealth plays a part in that because if you have the money and you have the resources, you can do a whole lot more good for yourself, your family, your community, and your surroundings. The third thing you got to understand about your mindset when it comes to money is that money is just a tool. Having money doesn't make you a good person, and it doesn't inherently make you a bad person. Having money just gives you money. Having money gives you the opportunity to send your kids to a better school. Having money gives you the opportunity to go on better vacations. Having money gives you the opportunity to buy better gifts for your spouse. Having money gives you the opportunity to feed more hungry people. Having money gives you the opportunity to drive a better car. Okay? Having money is a tool. It does not make you a better person. It does not make you a good person. It's just a tool, and you, as the owner and the holder of your money, get to decide how you get to spend that money. So you got to understand that money, it does not make you a good person. It doesn't make you a bad person. It just gives you money that you can use as a tool. And the last thing you gotta understand about your mindset of money and wealth is you gotta stop blaming luck for the reason why people become successful, because that's one big lie. Everybody says that, oh, this person became wealthy just because they had rich parents or because they got lucky or whatever. But the reality is that's just not true. I mean, Fidelity did a study where they looked at millionaires across the board, and what they found is that there was a portion of millionaires out there that inherited a big chunk of their wealth. But it wasn't everyone. I mean, it was only 12% of millionaires out there that inherited 10% or more of their wealth. So yeah, there is a factor of luck involved. But for 88% of millionaires out there, these are people that did not get this wealth inherited to them, or do not have rich parents. They did not grow up going to country clubs. They did not have a trust fund. These are people that created their millions themselves. Now, this is not to say that there's no luck involved in becoming successful or wealthy. There is some luck involved. But what you have to understand is that the majority of people who became wealthy, these are not people who were just given their money. These are people who worked hard and found a way to become wealthy. And what you find out is the harder you work, the luckier you become, because luck happens when hard work meets opportunity. And so the harder you work, the more prepared you will be, and the more ready you will be when the opportunities come your way. Are there some people who have the money just fall into their lap? Yes, some people just win the genetic lottery, or some people just win the actual lottery, and some people just have the money given to them. But that's the exception to the rule. That's not the rule. The majority of people who become wealthy are people who created themselves by understanding the mindset and the four other things that I'm about to talk about. When you see somebody who has become wealthy, all you see is the tip of the iceberg. You see where they are now, you see the car that they're driving, and you see where they live. And it looks nice, and it's easy to say that they became lucky, but what you don't see is all the sleepless nights, all the hard work that they went through, and all the kind of pain that they went through to get to where they are today. And so if you want to become lucky, you got to look a little bit deeper and look beyond just the tip of the iceberg and see what it really takes to get there. And you got to stop blaming other people for becoming wealthy and understand how you can do it yourself. The second thing you got to do is work on your income. So this is where things get a little bit tricky, because first we develop the mindset. And now once you got the mindset, you got to start earning money. Now there's a couple things you got to understand about your income. The first thing you got to understand is it's not just how much money you make, it's what you do with the money you make. But having more money can accelerate your path to becoming wealthy, and this is where you gotta make some hard decisions about yourself. If you're not happy with the amount of money that you're making, then you gotta do something about it. Look at yourself in the mirror and ask yourself, why are you not making the money that you deserve? Is it because you don't have enough skills, not enough degrees, or are you working a job where you're just getting underpaid? If you're not happy with the amount of money that you're making, you gotta stop complaining about it and you gotta start doing something about it. If you don't have the skills and you don't wanna go back to school, or if you don't wanna learn a new skill, then maybe you gotta take on a new job. Maybe you gotta learn a new side hustle. Maybe you gotta start a side business and do something to supplement your income. If you're just complaining about it and you're saying, man, I wish I made more money, I wish they would just raise my wages for doing nothing more except what you're doing right now, then you're just playing the emotional game and hoping that luck is gonna come through the door and put $1 million on your lap. If you're not happy with how much money you're making, ask yourself why and then do something about it. Depending on where you are and who you are, that might mean adding a second part-time job to your routine. And I know that's hard and it takes a lot of work, but I've been there. I went to law school full-time and I was running my business full-time, and I went to acting school in the evenings. It is long, it is hard, but it's a sacrifice that you gotta be willing to put in today if you wanna achieve more income. So you gotta know what you want, and if you're not getting what you want, ask yourself why, and then figure out what you gotta do to get the income that you want. The second thing that you gotta understand when it comes to your income is that there's a lot more to becoming wealthy than just how much money you make. I'm gonna talk about this in the third point, but having more income only does good if you know how to use the money that you're making. If you're just making more money to drive a better car, to live in a bigger home, you're just spreading yourself thinner, and now you have to work even harder to keep making all of your payments. So what you got to understand about your income is there's a lot more to becoming wealthy than just making a lot of money. It's what you do with the money you make. There's a reason why so many high income people, so many high income doctors, so many high paid athletes, so many people who win the lottery still live broke, because they're living paycheck to paycheck. They're making a lot of money, but they're spending all the money that they make. So you got to understand how an income plays a part in your life. Yes, having a big income can help you accelerate your path to wealth, but it can only do that if you're using your income the right way. And that's what I'm going to talk about right now with number 3. You got to pay yourself and stop spending all of your money. So Americans have an issue where when they make money, they feel like they deserve to spend this money and they deserve to have these nice things, because it's very hard for Americans to go through the short-term pain for the long-term freedom that you can get from not spending all of your money. I mean, it's just a strange culture that we live in where everybody feels like they need to have the newest iPhone. They feel like they need to have the newest laptop. They feel like they need to drive a brand new car. They feel like they need to live in a big home. They feel like they need to have all the newest things, and all these things keep costing you money. And now you look really good on Instagram and you have all these nice things, but you have no money left to pay yourself because you're playing in this game living off your feelings, where you spend money based off of what you think will feel good right now instead of what's good for your wallet long term. The vast majority of Americans are living paycheck to paycheck. Now, if you ask these people why, everybody will say it's because they're not making enough money. We say it's an income problem, but that's like the government talking. The government always says they're not making enough money, but we never look at how much money we're spending. There's also a spending issue. There's two sides to the coin. It's how much money you make, and it's what you do with the money you make. We can keep blaming us how much money you make, and sure, that might play a part in it, but that goes back to what I just said before. If you're not making enough money, why is it? Can you work a second job? Can you do something else? Can you learn a new skill? Can you make more money? Sure, that might play a factor. But on the second side of the coin is, how are you spending your money? If you're living paycheck to paycheck and you drive a brand new car and you have AirPods and you have a brand new iPhone, then chances are there's more to this problem than just how much money you're making. You got to look at what you're doing with the money you make. If you've been watching my videos, chances are you've heard me talk about guacamole a million times on our channel. Now, the reason I talk about it so much is because I love guac. And I have the money to afford an extra side of guac, no problem. But when I go to Chipotle, I never order an extra side of guac, because it makes no sense for me to pay $3 for a small little extra side of guac when I can go to Kroger and pay $1 to get a whole avocado, and now I got 4 sides of guac for a fraction of the price. Yet people keep going to Chipotle and buying the extra guac. Now, I know what you're thinking. Oh, Jaspreet, a $3 side of guac is not the reason why people are living paycheck to paycheck. Yeah, I get that. A $3 side of guac is not the reason why you're broke, and spending $4 on a coffee is not the reason why you're broke, but it's not having the right mindset, because you're spending money on things that you should not be spending your money on right now, because right now what you need to be doing is paying yourself. Because if you're complaining about living paycheck to paycheck and not having enough money, yes, we can look at how much money you're making, and you should work on how much money you're making to work to increase that, but you also got to look at how you're spending your money. Are you spending your money on things that you don't need? Because that's the easiest way for you to have some more money left over to start paying yourself right now, is just by not spending all your money. If you look at things strictly financially, do you know how rich people get rich and how wealthy people stay wealthy? It's pretty simple. They spend less money than they have. They live like they're broke. They don't spend every dollar that they make on nice cars and clothes and shoes. They spend some money on themselves. And when I say pay yourself, what I mean by that is you're saving some of your money for an emergency, and you're investing some of your money, that way your money can grow and make you more money. If you are not paying yourself, if you're not spending some of your paycheck every month to go directly into your savings account, and if you're not having some of your paycheck go directly into your investments every single month, then you are not paying yourself, and you are doing yourself a disservice, because all of your money is going out making everybody else around you rich, but it is leaving you broke. The issue is we live in this culture where we all live in our feelings. Like, we feel like we worked really hard, so we deserve to reward ourselves by going on this really nice vacation, and we deserve to reward ourselves by buying this really nice car or buying this watch. Now, these things are nice. I want you to have a nice vacation. I want you to have a nice car. I want you to have a nice watch. But I don't want you to sacrifice yourself from paying yourself, because then you're going to pay the price in the future. I want you to have these nice things, but I also want you to be able to afford it first. Let me let you in on a little secret. Nobody who's worth $1 million is flying on a private jet. Unless you're one of those people on social media that's taking pictures on a private jet. That way you can sell more of your course on how to be rich by living your life and doing whatever it is you do. But nobody who's actually worth $1 million is flying in a private jet, because people who are actual millionaires understand what it took to become a millionaire, and they're not going to just blow all their money on something that's not going to help them keep their wealth and grow their wealth. You got to stop living this Instagram flex life where you're living life just to show off your income. What you got to do right now is live below your means and pay yourself first. That way you can use your money to build your wealth, use your money to build your savings. That way you can be free, and once you pay yourself, then you can live your life the way you want without worrying about the price. I probably should have put a trigger warning in the beginning of this video where if you're easily triggered, don't watch this video. But I did tell you that you gotta step away from your feelings in order to really do these things. So let's move on to number 4. You gotta stop the payments if you wanna become wealthy. Now, look, there's 2 types of perspectives when it comes to your payments and the way you live your life. On one side, you have the Dave Ramsey approach, which is the no debt, no financing, anything approach. Whenever you wanna buy anything, you gotta buy with cash, whether it's your investments or your liabilities. No matter what you want to buy, you got to buy it cash. On the other hand, you have Robert Kiyosaki, who is essentially like finance everything, never pay for cash for anything, and then use your money to buy investments and have your investments pay for all of your stuff. Both of these options can work. Obviously, one is less risky than the other, and one is harder to achieve than the other because now you have to afford everything in cash. But what you really got to understand now is the difference between an asset and a liability, and when are you stretching yourself thin by financing something? Because when it comes to things that are not making you any money, you should not be financing it, because when you're financing your clothes, now you're paying interest on something that is not making any money and something that is depreciating in value. So not only are you paying top dollar, you're paying interest on that, and this thing is just losing you money. Kind of like what I mentioned a minute ago, one of the easiest ways to keep more money for yourself is to stop having money leave your wallet. And one of the ways that you can do that is stop financing things and pay off the debts that you do have. That way you don't have money constantly leaving. I mean, you can think of it kind of like a cup. And at the bottom of a cup, you have a hole. This hole is your payments. Now, the more debts that you have and the more payments that you have your car payment, you have your mortgage payment, you have the financing payments for your clothes, you have your furniture payments, you have your credit card payments. The more payments that you have, the more holes that you have. And now when you take your income, which in this case would be like a glass of water, and you pour it into the cup, the more holes that you have, the harder it is for the water, your money, to actually stay in this cup. So if you want to keep the money in the cup, what you got to do is you got to seal the bottom, and you got to stop having those payments. That way water can stay in your cup and it can start flowing upwards. That way now you have the money to create more income coming into your cup. So when I say stop the payments, that means 1, on all of your liabilities, the things that are not making you any money, your credit card payments, your car payments, these are things that you got to pay off quickly. That way you have less money leaving your account. Second, when it comes to buying more things, no more financing anything that does not pay you. And number 5 is you got to have patience, because you got to understand that building wealth is a marathon. It's not a sprint. This is not something that's going to happen overnight. And when you want it to happen overnight and you want it to happen quickly, you're more easily to get caught into one of those get-rich-quick schemes and falling into risky investments where now you're spending a whole bunch of money on things that are not making you any money, because when you jump into those get-rich-quick schemes, the only person you're making rich is the person selling that get-rich-quick system. Now, if you do want to accelerate your wealth, there's nothing wrong with that, but you just got to know how to do it the right way. On one hand, you got to work on earning more money. And now, as you're earning more money, you got to use more of your money to actually pay yourself. That means saving your money for your emergencies and putting more money towards your investments. That way you have more money working to actually build your wealth. So if you want to do that, hey, great, work on earning more money, but understand that takes patience too. Building a business, building a side hustle, getting the raises, doing whatever you got to do to earn more money does take time. I mean, think of it like building a YouTube channel. You don't build a YouTube channel overnight. These are things that take time to build. You want to build a business, it takes time to build. These are things that take years. And so if you really want to become wealthy, you got to have the patience in your mind, and you got to understand that this is not something that's going to happen tomorrow. This is something that you're working on for your lifetime. That way you can live wealthy and live free. It's not something that's going to happen next week, next month, next year. This is something that we're building for the long term. And so you got to have the patience in order to build the wealth. There's one mistake that so many Americans are making at Payday, which is not only destroying your finances, it's keeping so many Americans poor. And no, it's not missing the contribution to your 401k or not investing for retirement. It's much worse than that. take a look. I was reading an article on Startup Info titled How Millennials Are Approaching Payday Loans. And the first line of the article reads, in recent years, millennials have increasingly turned to payday loans as a financial bridge to navigate short-term cash flow challenges. The thing that so many people get wrong about payday loans is you might feel like it's not that big of a deal because you just pay this little fee and then you can get the money to go and pay for your groceries or pay for your rent and not have to pay late fees. But there's a lot of hidden costs that most people don't really understand about payday loans. Not to mention the fact that the use of payday loans has been booming. I started to dig a little bit deeper and it turns out the payday lending business has been a booming industry, especially amongst young people recently across the United States. Here's how payday loans really work. Let's assume that you get paid on the 1st and the 15th of every month, but now it's the 7th of the month and you're running out of money and you got some bills to pay. You got to make a car payment and you got to get some groceries. So you need some money quickly. And if you don't make these payments quickly, well, then you're going to be hit with late penalties and other fines. So now you go to a payday lender and you go and you borrow just a small $500. And they tell you that if you want to borrow $500, all you have to do is pay us back in 2 weeks and pay us a $75 fee. Now, if you pay them back in 2 weeks, no big deal because you're going to get paid on the 15th. So you're going to get the money to pay them back. And it's just a 75% fee. I mean, if you do the math, that is a 15% interest. Not too bad because if you put it on your credit card, it might cost you 20% interest. But this is where I want you to dig a little bit deeper and really understand the consequences here. This is a 15% interest that you're paying on a 2-week loan. If you amortize this loan, this $500 that you're borrowing over the course of a year with these types of fees, that means actually the APR on your loan is close to 400%. And you have some payday lender companies that are now charging upwards of 2,000% APR annual interest if you amortize the fees that you'd have to pay over the course of a year. But that's just the beginning. Not only are you going to be paying insane interest rates to borrow this money, which is making somebody else rich at your expense, but what happens to so many people is as soon as you get that first payday loan, now you feel like it's an okay thing to do. Now, next month, the exact same thing happens. And now you got to go and borrow another $500, maybe $600, maybe $700. And now it becomes a brand new cycle where every single month you have to go and borrow some money just to make ends meet, instead of actually fixing the root cause of your problem. Because now whenever it comes time for you to build wealth, you can't do it because you're constantly relying on payday loans just to have food to eat. And when you're relying on payday loans to pay for your bills, you will never have a chance to actually be financially free yourself. And this is where now you have to make the difficult decision of figuring out how do you break out of this mess? Because yes, it is possible, but it requires you to do 5 things. Number 1, and the most difficult, is I want you to stop spending money on things that you do not need. Stop going to the mall and spending money there. Stop buying the expensive groceries. Stop going out and buying all the clothes. I need you to stop spending money on things that you don't need and find ways to put aside $50, then $100, then $500, then $1,000. You have to figure out how you can stop spending money, because the easiest way to have more money is to stop letting money leave your bank account. And this one's going to be difficult because a lot of times we get accustomed to thinking we have to buy things, thinking we have to be able to go out to eat with our friends on Friday night, thinking we have to be able to go to the club or the party at Saturday, thinking we have to go and buy gifts for the wedding we have to go to. Say no to these events for a little while, because if you're going to the payday loans to make ends meet, you are in a financial danger zone. And right now you have to start prioritizing your own financial health, and that means saying no to the things that are hurting your financial health. Number 2 is I want you to go on a selling spree. Figure out what you can sell around you from your apartment or your house. Walk around, see what is there that's collecting dust that you don't need, whether it's clothes, whether it's electronics, whether it's other equipment or furniture. Figure out what it is that you don't need right now that you can turn into cash. And it might even be things that you're financing. If you're financing that expensive car that's taking the expensive gas, that has the expensive maintenance, that has the expensive insurance, sell it. Put that money in your pocket, drive around in a car that you can buy without any payments. That way you have some extra money in your pocket. Figure out what there is around you that you can sell, because right now you have to get more cash so that we can build a savings cushion and a cash buffer. If you don't have a couple $1,000s saved in your savings account, There's really no way for you to ever build any wealth, because anytime something bad happens, and guess what? Bad things will happen because that's life. You will always have to go to debt. You'll always have to go to the payday loans. You'll always have to turn to your credit cards in order to make ends meet. And you'll never be able to ever become wealthy if you're constantly worried about just making ends meet. So you got to figure out how you can put aside $2,000 in your savings account to protect you against emergencies. Not $2,000 to go on a shopping spree, $2,000 to protect you against bad things happening as fast as possible. Number 3 is I want you to take a look at your bills, and I want you to renegotiate your bills. What that means is I want you to take a look at your credit card statements and see what type of subscription services you have. Is it internet? Is it your phone bill? Is it your cable bill? And then I want you to call these companies and see if they have any new promotions, see if their competitors are offering new promotions. That way you can get your bills reduced, because what happens with all these companies, all these subscriptions, is every single year they're going to slowly jack up your prices, and they're going to hope that you don't say anything. But this is where it's time for you to start saying something, because what can happen is many times these companies will be willing to renegotiate your bills lower while not even disrupting your service. That means you don't have to sacrifice anything, and you get to keep more money in your pocket every single month. Every time I've talked about doing this, I always get some comments from people saying, "Oh my God, I never thought about doing this, and now I'm putting more money in my pocket every single month." And the second part of renegotiating your bills is I want you to go through your statements and figure out what it is that you can cancel. If you're broke and you have a monthly massage membership, you have a problem. If you're broke and you're spending $500 a month at Saks, you have a problem. If you're broke and you're spending $600 a month eating out at restaurants, you have a problem. And I want you to go through your bills and just take a look at what it is that you can start cutting out. Because what happens to a lot of people is when you don't look at your credit card statements, when you don't look at all of your expenses, you forget about some of the subscriptions that you have. And they just keep charging you and charging you and charging you for a service that you didn't even know that you were still paying for. Number 4, I'm going to start this one with a disclaimer, because if you don't like me now, you are definitely not going to like me after this. But number 4 is I want you to cancel your Netflix subscription. And the reason why I want you to cancel your subscription is not so you can save $10 or $15 a month or however much it is, but so you can save 2 hours of your life every single day. If you are broke, if you're struggling with money, if you're going to get payday loans, you should not be spending that time watching Netflix. It makes absolutely no sense for you to be sitting there comfortably, sleeping 8 hours a day, watching Netflix before you go to sleep, when you got bills that need to be paid, when you got payday loans that need to be paid. Now, I know this is coming out harsh, but I want you to understand this is coming from a point of love, because the reality is when you are struggling with money, the most valuable asset, the most valuable commodity, the most valuable thing that you have is your time. And if you're spending your time giving it to Netflix, watching shows that are adding no value to your life, you are killing your opportunity to become wealthy. You are killing your opportunity to become financially free. You're killing your opportunity to break out of this system. And so what I want you to do is stop giving this time to Netflix and give this time back to yourself. And what I mean by giving this time back to yourself is, number 1, start watching educational videos on YouTube. Start listening to educational podcasts, because these things are not going to cost you anything else. You're already watching this video. That's a great first step. The second thing I want you to do is start spending a little bit of money. And when I say spending a little bit of money, I mean start reading books. And not just reading any books, start reading educational books, whether it's about money management or starting a business or startups or biographies of successful people or how to manage people or how to advance in your career. I want you to start reading books. If you start spending your time, instead of watching Netflix, to start learning, I guarantee you, in 6 months, you're going to look at money and life completely differently. 6 years from now, you're going to be in a completely different financial situation because of what you're putting in your brain. If you sit there rotting in that same environment, watching the same TV shows, struggling about bills, hating your boss, hating your work, hating your boss, hating your work, hating how much money you're making, hating the financial thing that you're in, you got to get yourself out of that. And the way that you can get yourself out of that is not by complaining. It's not by sitting there and hoping that it's going to happen. It's not by sitting there praying that it's going to happen. It's by actually doing something. And that means starting by changing what you learn, changing the way you think. Now look, I'm not against prayer. Go ahead and pray, but you got to take action. Your prayers are not going to change what you do. You got to go out and start learning, and you got to start taking action on what you learn. And this is where I want you to please Understand that your Netflix is killing your brain cells, and I want you to do something that's growing your brain cells and also growing your bank account. The fifth thing that I want you to do is now figure out how you can go out and earn more money. And the reason why I put it at number 5 here is because if you started working to earn more money first, what would end up happening, statistically, we've seen this happen time and time again, is if you went out to earn more money before you knew how to use your money, most people statistically would go out and spend that money on a new watch, on a new car, on a new home, on a new vacation. Most people are working to earn money to buy more nice things, which puts you in the exact same situation which got you here in the first place. And this is where now, if you want to break out of the system, you have to understand how to use your money first. Once you know how to use your money, start changing your environment, this is where having more money will allow you to build more wealth. Now, as you start to earn more money, this is where now you can be smarter with your money. You can start saving some money, and that's when you can start learning about how to invest your money. Now, of course, if you want to learn how to invest, that's a whole different world of financial education. But you don't need to worry about investing your money until you can get rid of the payday loans. Once you get rid of the payday loans, now you can start thinking about more of how do I invest my money and how do I grow my wealth? Because investing is about growing your wealth. This is all about building that foundation. This is what's going to allow you to invest more money. But you have to know how to lay the foundation first before you go and start putting money in the stock market, trying to get a 5, 6, or 7% return, maybe a 10% return, when you're paying 400% interest to your payday loan company. The way that you break out of the financial system of constantly making everybody else rich, of constantly feeling like you're broke, of constantly feeling like you're chasing money, of constantly feeling like you're having to go to work just to pay yesterday's bills, is you got to start by controlling the spending. And once you can control the spending, then you can build a little bit of a savings cushion. Once you can build a little bit of a savings cushion, you're going to be able to breathe a whole lot better. Then it's all about money management. How do you spend your money smartly? And then it's about how to use your time smartly. Once you can learn how to use your time smartly, now we start talking about how can you earn more money. But you have to stop playing this game of constantly trying to chase the next paycheck, because when you're always trying to chase the next paycheck, you're going to always look for some solution to make ends meet before the next paycheck. And that's what's keeping so many Americans broke. And it's so unfortunate because, well, you have a lot of businesses that prey on people being financially stupid, and this is where it is your job to start building the financial education. That way you can start building your own wealth instead of making everybody else around you rich. There are 7 habits keeping the majority of Americans financially poor. And if you stick with me until the end of this video, not only are you going to understand what these habits are, but you're going to understand what not to do, that way you can continue building your wealth and not end up like the majority of Americans. Number 1 is you drive a car so expensive that you can't afford the gas. Yesterday, I was on the phone with somebody who works with me out in Miami, and what she was saying is the funny thing about Miami is this is the only place where you'll see people driving around in Lamborghinis who can't afford to pump their own gas. At the time of me recording this video, the average used car payment in the United States is $528 a month. And the average new car payment in the United States is now $729 a month. That means that Americans are paying a record amount of money, not just to buy the car, but to finance the car month after month after month. But let's really understand what this means, because now what you're doing is you're paying this money every single month to drive a car. And if you have a nice car, you got to pay for the premium gas, which is a lot more expensive than the regular gas. And if you drive an expensive car, you also got to pay for the expensive insurance. And then you got to pay for the expensive maintenance. Because guess what? German cars have much more expensive oil changes than non-German performance exotic cars. So now not only are you paying more money on your car payment, but you're paying more money in gas and your insurance and your maintenance and your oil changes and anytime something goes wrong. But what happens now to your actual car payments? Because all this money that you're sending to your car payment isn't building you any wealth. You're driving around in a car that's losing value every single day. I mean, eventually that car is going to be essentially worthless. But instead, what if you took this money and you put this money to work for you? Instead of giving it to your car dealership, what if you gave this money to yourself? Maybe what if you just saved that money? Or what if you invested that money into your future to build your wealth? I mean, if you took the same $528 a month and you put this money into the stock market and you could get, let's just say, a 10% annual return on your money, average, which has been around the average historical stock market return for the last century. If you took the $528 a month, I'm not even going to look at the benefits you're going to get from not having such expensive insurance or not having such expensive premium gas. But if you took the $528 a month and you invested this money into the stock market, maybe you just put it into an ETF, giving exposure to the total stock market, you get a 10% return. You do this for 30 years, you're going to have an investment fund worth over $1.1 million. You drive a car for 30 years, it's going to be worth nothing. In fact, what's going to happen is you're going to pay this car off after 6 years, and then you're going to feel weird not having a car payment. So then you're going to trade that car in, get a new car with a higher car payment, higher insurance, and now your payments slowly start to go up every 5 years. You have a higher car payment, then a higher car payment, then a higher car payment, because cars keep getting more expensive. Then you're going to say, but Jaspreet, I need a car to get to work. I need a car to pay for my bills. I need a car to do my things. How am I going to do that if I don't have a car payment? Well, you put $8,000 down to go and buy this car. Instead of taking the $8,000 to put it as a down payment for your car, take the $8,000, go out and buy a used working condition car. Maybe you're not going to get a nice BMW anymore, but you can get a used working condition Toyota Corolla, maybe a Toyota Camry, and now you got a car that uses regular gas, that has cheaper maintenance, that has cheaper insurance, and that doesn't have a car payment. And now you don't look like that cool person in the new car, but you have real wealth being built. And then as you start to build this wealth, well, then you can start to go out and buy the nicer cars without having a car payment. Because when you finance your car, not only are you paying interest on this car, but you're paying interest on a car that's losing value each and every month. And rule number one to building wealth is you don't want to pay interest on something that's losing you money. You want to be earning money and using your money to live your lifestyle instead of working your job to pay for interest on a depreciating liability. What wealthy people want to do is they want to own assets to pay for their depreciating liabilities, because now your money is working hard to buy you all the dumb and expensive stuff. But while most people are doing the opposite. Most people are working hard. They're working hard at the job to earn money. That way they can drive around in the expensive dumb stuff. Nothing wrong with having expensive dumb stuff, but you want your money to pay for that for you. You want the money that your money earned to pay for that for you. But you are working hard to buy expensive dumb stuff. Well, that's not a very good arrangement. And that's why you want to switch the way you look at money in driving your car. Habit number 2 is you treat your home like a savings account. The average American will tell you that the home that you live in is your biggest and best investment that you can make. And I understand, because I am a licensed realtor. And when you become a licensed realtor, one of the things they tell you when you learn how to sell homes is that you're selling a great investment. This home that you live in is an amazing investment, because if you go out and buy this home for $500,000 today, you can add more money into the kitchen, into the basement remodel, into making the bedrooms and bathrooms nicer. And maybe when you go to sell this home, you're going to be able to sell it for, I don't know, $650,000. Or even if you don't sell this home, well, you can pull this new cash out of your home through an equity pullout, through a cash out refinance. This equity is wealth that you are building, not just for yourself, but for your children and your grandchildren, because one day you'll be able to pay off this home, and now you have this amazing asset. Well, let's talk about this, because the home that you live in is really not a true asset. Because why are you buying the home to live in? I mean, you're not buying this home to make money. You're buying the home to make memories. You're buying the home to actually use. And if you're buying the home to actually use, that's going to be a very different financial decision versus buying something like a rental property to make money. Because when you're buying something to make money, you're going to look at it very differently versus when you're buying something to actually live in yourself. And now, when you buy this home to live in, you have to pay money to live in here. How do you make money to live here? Well, you got to go to work to continue making payments here. So you're going to work to make the payments here. You're the one that's working to pay down the mortgage. And then on your mortgage, if you get a 30-year fixed rate mortgage, the first half of your mortgage, actually the first 14 years of your mortgage, more than half of your monthly payment is going directly into your banker's pocket with interest, because your mortgages are front-loaded. Your banks want to get paid before you get paid. So during the first year, when you're paying your $2,000-$3,000 a month in your mortgage payments, almost all of your mortgage payment is being used to pay your banker's interest, as opposed to building any equity in your home. I mean, if you look at the principal balance of your loan, what you'll see is in the first few years, you barely make a dent in the principal balance. And the reason why is because your loans are front-loaded. Your bankers want to get paid before you do. And then not just that, you got to pay for the property taxes. Then you got to pay for the HOA. Then you got to pay for the water bill, the electric bill, the gas bill. And then when you upgrade the property, you got to pay for that too. And when the window breaks, you got to pay for that too. And when the roof gets old, you have to pay for that too. And then you have to hope that 10 years from now, when it comes time for you to sell the home, that you can sell it for a profit. And then if you start following your banker's advice, well, if your home goes up in value, then you can just pull the cash out and use the money to buy a car. You can use the money to go on a vacation. You can use the money to go and spend. But when you use the money, again, to finance more liabilities, you're using tomorrow's income to fund today's expenses. Because when you use this equity to go out and fund your vacation, that $10,000 vacation that you just bought has to be paid back with interest. Well, how are you going to pay this back? You're going to pay it back by going to work. And so now you get stuck in the cycle, you get stuck in the system. You have to go to work to get paid. Why? Because you got to keep paying back your bills. Now, I'm not saying it's bad to own a home. There's nothing wrong with owning a home. But you have to understand that your home is not a savings account. Your home is really not the best wealth building tool. You don't hear a wealthy people talking about how I became so wealthy because I paid down my home. No. Wealthy people become wealthy because they build a business, or because they buy a business, or because they invest in stocks, or because they invest in rental properties. They don't talk about how they became wealthy because they paid down the equity in their home. They talk about how their home is an expense, about how you have to pay for all these expensive things to continue funding your home. Maybe you'll be able to sell your home for a profit, but if you sell your home for a profit, you no longer have a home. And this is where now you have to understand the difference between using your home as a savings account and just owning the home that you live in. Treat your home like a liability, because if you do that, you're not going to stretch yourself too thin. You're not going to stretch yourself too thin. That way now you own a home, but you have no more money to invest. And that's what ends up happening to so many Americans. Is you go out and you tell yourself, and your banker's going to tell you the same thing, your realtor's going to tell you the same thing, your parents and your friends are going to tell you the same thing, that your home is the best wealth building tool and you have to own your home. And when you do that, now you might go out and stretch yourself a little too thin because now you want to have that dream home because it's an investment. I mean, why not? So now you go out and buy this dream home, and then you have no money left over every single month because you're spending all your money in your home. And now you don't have any money to put into the stock market. You have no money to buy a rental property. You have no money to start the business idea. You have no money to invest into other business ideas. And now because you have no more money to invest, all your money is being sunk here into this money pit, which you thought was an asset, that you thought was an investment, that you thought was a good financial decision. But in reality, it's just pulling money out of you. A real investment is something that will pay you as opposed to something that you have to pay for. And now, if now you took the same money and you went out and you bought a rental property, now this rental property is going to be the one that's paying for the mortgage. Your rental property is going to be the one that's paying for your utility bills. Your rental property is going to be the one that's paying for the upgrades. Your rental property is going to be the one that's paying for the property taxes. And the rental property is going to be the one that's putting some money in your pocket every single month, as opposed to this, you are the tenant. Yeah, you own the home, but you're the tenant that's got to pay for all the expenses. Now, I'm going to say this one more time. Nothing wrong with owning a home. I actually like home ownership. I like the idea of you owning a home, but I want you to be a smart homeowner as opposed to somebody who's thinking that this home is the best investment that you can make, and now you go deep into debt to buy a home that's way beyond your budget, and now you have no more money to actually invest into real assets that will actually make you wealthy. Number 3 is you wait too long to start investing. If you want to build wealth, there's 3 things you got to pay attention to. TRD. Time, return, and dollars, period. If you use any compound interest calculator, if you use any wealth building calculator on the internet or anywhere, what you'll see is that the 3 questions that any calculator will look at to see how wealthy you will become is how much time do you have for your investments to grow and compound? What is the return of your money, meaning how fast can your money grow? And how many dollars are you going to invest? The more dollars you invest, the wealthier you become. The more time that you have invested, the wealthier that you'll be able to become. And the faster your money grows, the wealthier you will become. Now, when it comes to time, what do any of us think is, okay, you know what? I just graduated college. I want to go buy a new car. I want to get myself an apartment. I want to go on a vacation. I don't want to start investing yet because I finally am starting to make some money. So let me just start going out and enjoying my time. Let me just start enjoying my money. Then you turn 25 and now you start to have weddings to go to. Some of your kids start to have baby showers. You start to think about your own wedding process. And now you're like, you know what? I'll start financially planning when I get closer to getting married or when I want to go out and actually start my life and settle down. Now you hit around 30 and you start to get married, or you're around the time of where you're getting married. Now you got to plan for the wedding. That has a cost. So you know what? I'm just going to hold off on investing until I'm done with the whole wedding costs and buying our first home together and buying our first car together, because that's just really expensive. And then now it's finally time. You're in your 30s. You're ready to start investing and start settling down. But then you think about having kids. And kids are expensive. You got to think about childcare. You got to think about what are you going to feed the kids. You got to think about your kids' clothes. You think kids' schools, and all these things have a cost. And maybe you start investing a little bit in your 401k because your friends are doing it, but you keep putting off this idea of investing more because you have all these expenses that keep adding up. And then you turn 35, and then you turn 40, and everything keeps happening. Your kids have friends who have birthdays. Your friends have baby showers. You have weddings to go to. You got trips to go to. You got bachelor parties to go to. All these things are expensive. And one of the most important factors, you got 3 factors that will determine how wealthy you will become. You cannot change time, but you can change the return, you can change the dollars. But the one factor you cannot change is time. And this is why it becomes incredibly important for you to start investing sooner rather than later. Even if you don't have a lot of money to invest, well, guess what? If you can start at the age of 21 with $100 a month, that is going to be extremely powerful. And this is where now make a little bit of a sacrifice to start investing sooner rather than later, because this money will have more time to compound. And the more time that your money has to compound, the wealthier you will become, period. You don't even have to know how to invest. Just start throwing some of your money into the stock market. I know you don't want to do that, but just start. Because the more time that you have to invest, your knowledge is going to compound, your money is going to compound. Yeah, there will be times where you lose money. There will be times where you go through a market crash. There will be times where you go through a recession. This is a part of our economic system. But your money has to have time to grow. And you cannot go back in time to start investing 5 years ago. You can work to improve how many dollars you invest. You can work to improve your financial education, improve your returns, but you cannot change this time, which is why you have to get started with investing sooner rather than later. Number 4 is you act like an influencer. The difference between a social media influencer who's showing off their fancy brand name stuff and a random person on the internet who's showing off their brand name stuff is that the influencer is generally getting paid. When the influencer is getting paid by Gucci and Louis Vuitton and Lululemon to wear that stuff, they're getting paid to wear this stuff. They're getting paid to wear the brand name stuff. It's an investment for them because it's putting money in their pocket. When you go out and you buy Gucci, you buy Lululemon, you buy the Louis Vuitton, that stuff that you're buying is not an investment for you. It's an investment for Gucci, Lululemon, and Louis Vuitton, because they're the ones that are getting paid. And so if you're not getting paid to wear the Nike, if you're not getting paid to wear the Lululemon, if you're not getting paid to wear the Gucci, it's not an investment for you. Now again, nothing wrong with buying the stuff, but you got to understand where in your financial journey that you are. If you're struggling to pay your bills, if you don't have any investments, if you're not generating any cash flow, if you don't have any dividends, if you don't have any rental properties, and you got all the brand name stuff, your priorities are in the wrong place. And you got to remember now, what is an investment versus not? If you are an influencer and you're getting paid to wear the Gucci, that's an investment for you. If you're not getting paid to wear the Gucci, it's not an investment for you. Number 5 is you're counting pennies, not dollars. I was in Europe recently because I was invited to speak, and while I was there, I had some time to kind of roam around. And while I was there, I met a couple from America who recognized me. They came up to me and told me how they were on this beautiful vacation in Europe, checking out all these different countries. I think it was like a 14-day vacation throughout Europe, and I said that was amazing. And the couple asks me, because they had this debate between the husband and the wife, which was essentially, what are my thoughts on Starbucks? Because the husband and the wife are debating on whether it's a good idea or not to spend $4 a day on Starbucks. One of the people, I think it was the husband, was upset that the wife was going to Starbucks every single day. And they were talking about how much money they were spending on Starbucks and whether this money would have compounded and grown to actually build wealth. And the funny thing was, I looked back at them and I asked them, how much money do you think you spent on this vacation? I think they told me $15,000 on this 2-week excursion through Europe. And you're asking me about $5 at Starbucks, if that's going to make a difference in your life. Because over the course of a year, $5 at Starbucks every day is about $1,500, and you spend 10 times that on this vacation. So now the question is, where are the bigger money questions? Is it Starbucks that's keeping you struggling financially, or is it a bigger question? Is it the expensive apartment that you have? Is it the expensive car that you drive? Is it these $50,000 questions, or is it the $5 a day question? And this is where now you got to just be honest with yourself. You got to know how much money you can spend. Is it the $5 things that's keeping you broke, or is it the $50,000 things? Is it the job? Is it your car? Is it your apartment? Is it some other expensive decisions, or is it the $4 or $5 that you're spending on that coffee? Number 6 is you buy what you deserve, not what you can afford. I already gave this example in a previous video, but I'm going to give it again here because I think it's very fitting. There was a news story here in Detroit about a lady that was being interviewed because her water was being cut off because she wasn't able to pay her water bill. Now, it was a very sad story because she was talking about how she no longer had the money to pay her water bills, so she didn't have money to give her kids water and all that. But the people that were giving her the interview, because you saw her on camera, showed that she had AirPods in her ear, the second generation AirPods. She was holding the new iPhone 14 or 15 or whatever it was in her hand, and she had Jordans on her feet. And so you could see kind of the comments of people talking about, wait, you have all these expensive things that you're wearing, and you don't have money to pay your water bill. Now, this might make some of you upset, but I'm going to be as real with you as possible. Nobody really cares about how you feel. We live in a society where it's very social media attractive to be kind of a victim in situations where, oh my God, I'm being abused, or oh my God, I'm being taken advantage of, or oh my God, I am losing in a situation. However, at the end of the day, it's not about how you feel, it's about what actually happens in your real life. And when it comes to money, that means if you're spending money on things that you deserve because you work so hard, so you deserve that Gucci handbag, or you work so hard, so you deserve to drive this nice car, or you feel like you finally deserve to have this dream home, but your bank account feels differently, well, guess what? You can go out and buy all that stuff. It's easy to buy things because of our society. It makes it very easy to buy things with easy lines of credit. It makes it very easy to buy things with buy now, pay later, or as I like to call it, broke now, broke like later. Or as I like to call it, broke now, broke later. And it's very easy to buy things because of credit cards. But in reality, if your bank account can't afford it, you're going to be the one that pays the price. People prey on your emotions. They prey on you being able to go out and deserve these nice things, to just go out and buy things and treat yourself. It's good for the corporations. It's good for the banks. It makes for great advertising, and it makes you feel good in that moment. But the reality is, and people don't want to say this because it hurts people's feelings, you can't. You can't afford that. And that's more difficult to say. And it's very hard for people to accept that because no one wants to hear no, especially in today's society where everything has to be kind of like softened and molded and sugar-coated. But the reality is, well, if you're broke, you should not be buying these nice things. If you're broke, you got to stop spending money on things that you feel like you deserve. And if you're broke, you got to make financial changes. You have to make financial sacrifices. And this is tough for a lot of people to hear, but this is the reality. Because at the end of the day, sympathy is not going to pay your bills. Sympathy is not going to pay your credit card bills. Sympathy is not going to pay for your rent. Sympathy is not going to put food on the table. But knowing how to spend your money will. Knowing how to spend your money will allow you to invest. Knowing how to spend your money will allow you to live below your means. Knowing how to spend your money will allow you to live financially comfortably until you have more money to live larger. And this is where you got to stop living in your feelings. That's hard in today's society, where everybody wants to cancel everybody who talks. And this is where honestly just understand what's real and understand what's right for you and look at your bank account. If you can afford it, you can afford it. And a simple rule of thumb here, because there's a difference between being able to buy something and being able to afford something, which is if you cannot buy 5 of them, you cannot afford 1 of them. And the 7th habit that keeps so many people broke is having a broke mindset. And you can see this all over the internet. Anytime you hear of articles, and there's a reason why Forbes and Inc. magazine and all these agencies publish articles that say things like, here's a list of the richest people in America who don't want to pay taxes. Here's a list of the wealthiest people in America who own more wealth than 50% of the population. There's a reason why they say things in a certain way. It's because they want to incite emotion. They want to get people riled up. They want to create the us versus them, because that makes more money for these agencies. And what you want to understand now is not trying to hate and get caught up in the emotions, because the emotions drive money for the media agencies. What I want you to do is cut through the noise, cut through the emotions, take a deep breath, and now understand, how does this play a factor for you? Because a lot of times, if these things don't really affect you, what I want you to do is look at how can you learn from it? Because if you can learn how to learn from it, now you will be able to ask the question of, how did they become successful? How did they become wealthy? What did they do? What can I apply to my lifestyle? And when you get caught up in this emotional social media rage, because that's what, it's very easy to do. Media companies are spending a lot of time, a lot of money, and a lot of energy to incite that, because that's what makes them more money. What I want you to do is don't give in to that.
But now understand, how do you win in this financial system? And that means not hating the success, but rather understanding the success and see how you can apply that success to your life. Because at the end of the day, that emotion is not going to pay for your bills, but the financial success, that money in the bank, will. It's flooring, you have the nice branding, you're spending money on all these random things, but they don't actually produce a real ROI, a return on investment for your company, because now you're just making it look like your company made it. But if you really want to now see the next level of success, instead of spending all that money on the fancy stuff, first spend the money